Hello students and welcome to the lecture. So students, as we know that we are covering the financial knowledge and the banking awareness part of it, and basically now we had started the discussion over the Securities and Exchange Board of India, SEBI. Alright, after finishing the several topics like the general introduction of the banking awareness, banking history, banking evolution, banking regulation act, types of banks, and banking reforms and mergers. Okay, so now we are discussing over Stock Exchange Board of India since last few lectures. Okay, and we have discussed the various you can say the prospects related with the topic. Okay, so in this lecture we are going to continue with the same topic and we will have a discussion over the different other facts and figures on the SEBI. All right, so before this I think we should revise some facts and figures which we had discussed already. All right, so that we could you can say furnish up our memory before we proceed further. All right, so if I'm giving you two you can say options, the first option stands for the establishment, second option stands for the statutory status. Okay, so these two options I have provided you. Now tell me these options consideration with the SEBI. So what should be the answer? SEBI was established in which year? It was the year of 1988. Okay, similarly if we take the statutory status of the SEBI, so in which year it has been granted with the statutory status? That was the year of 1992. That's what we had discussed, that it was established in the 1988, but the statutory status was granted in the 1992. All right. Secondly, if I'm asking you, what is the parent ministry of SEBI? So what is the parent ministry of SEBI? The answer is Central Ministry of Finance. Okay, so these are the some basic details which we should revise on the regular basis before we go further in the topic. All right, that's what we had discussed. Okay, and as we know, this is the topic we are discussing over Securities and Exchange Board of India. All right, so now we are going to discuss about the provision of investors protection by SEBI. Okay, so basically if we start the discussion over this, so let me ask you one thing. What do you mean by shares or securities? What do you mean by the shares or security? I had already told you about it. Okay, so we can say the shares and securities basically the contribution made by the investor to the company in return of particular benefit. Okay, it is called say share because it grants percentage of ownership. Okay, so you can say, suppose if there is a company XYZ, okay, which having 100 lakhs capital, okay, and you are the person who is holding 20% of share of XYZ. So it means that you have contributed 20 lakhs. Okay, so you are the owner of XYZ by 20%. All right, so that's why it is called the share, because it grants the percentage of ownership. But if I'm asking you why we call it security also, because when you give the 20 lakhs, not only you become the owner for 20%, but the management of the XYZ is liable and obligatory to you to provide you the particular benefit which has been promised to you while buying and purchasing of the particular share. All right, so that's why it is called the security also. All right, but in Indian stock market, and basically we have two main stock markets if we go by this. Okay, the first is the Bombay Stock Exchange. About them we will have a detailed discussion in the upcoming lecture. Till now I'm just telling you Bombay Stock Exchange, and second one is National Stock Exchange. These two are the stock exchanges we have. Okay, how many companies listed in the Bombay Stock Exchange? 30 companies. For National Stock Exchange, 50 companies. Okay, so investors protection basically applies on the retailers and the investors who are buying the shares. Remember, I had told you stock market is called as a stock market because there is a concept of buying and selling of shares. Okay, company is selling the shares, investor is buying the share. All right, so SEBI try to protect the investor. Why? Because the investor is the person who could contribute the money. Could contribute the money. All right, so SEBI always try that the investor who is a contributor of money to the market must not get involved in the wrong company. Okay, because investors also having the limited resources, you can say. For example, suppose this is our investor Mr. A. He is having two options: company X, company Y. Okay, he is having the limited resources of 20 lakhs to be invested. Okay, so for example, if he has invested the 20 lakhs in the company X and the company X got failed to give the optimum result to Mr. A, or even you can say company X got collapsed. In such a scenario, there will be a loss of Mr. A for 20 lakhs, but there will also a loss of market for 20 lakhs, because if this money would be invested in company Y, so there are chances that the company Y will give the more benefit returns to the Mr. A, and then Mr. A would be able to invest in the other companies as well. All right, so that's why investors protection are very important. Okay, because these are the contributors of money to the market. Okay, so SEBI focus on investors protections involves a multifaceted approach aimed at creating a secure and transparent environment in the securities market. Below are the details aspect of how SEBI enhances investors protection. Now we are going to discuss the facts and provisions adopted by the SEBI over the time. Okay, so let's start. The first is the education and awareness program. Okay, so SEBI conducts education and awareness program for existing and potential investors, designed to inform about investing basics, marketing function, risk and returns, and investors' right. Aims to empower investor with knowledge to make informed decision and avoid fraud. All right. Suppose if you are going to the stock market, for example, I am telling you, suppose assume yourself so that you could understand it better. You haven't touched a concept of stock market once in your life. Okay, and now you are going to the stock market for the investment. Okay, so what you will see, you will generally see that if this company is having the profit, so should I invest in it? But you will not see what is the risk associated with the investment. Okay, what is the company's response to the shareholders for last few years? Okay, is there any potential threat on the company in the nearby future? All right, so you're not going through these resources because you do not have the knowledge of them, right? You only understand if the company having the profit, we should invest it. If the company having the loss, we should avoid it, right? That's why the SEBI tries to educate and aware the investor. Okay, so that the investor should not only focus on the balance sheet and the profit the company is showing to him. But also the investor should be able to make his own decision by exploring the other facts and figures also, so that they could be rationalize their investment. All right. Second is dissemination of information about the financial products. Ensures necessary information about financial products and securities is available and accessible. Includes detailed information of companies issuing securities, mutual fund schemes, and other investment products. Okay, so we can say if the investor is being showed the, or you can say scheme, suppose we have a company called the XYZ. XYZ hired the intermediary. Okay, all right. The intermediary is approaching the investor. Okay, so the intermediary is claim that the company has make a profit of 20% in this year. In this year, this is the information showing to the customer. Okay, but the investor, sorry, not customer. Okay, but the company had also suffered a 60% loss in few last years. This is the information which not showing to the customer or the investor. So what will happen? By seeing the 20% profit in the last few years, the investor maybe make the investment in the XYZ. But if you compare the analytics, you will find out for last few years, the company was making the loss of 60%. And now only they will make the profit of 60%, sorry, 20%. Okay, which is lower than the loss they had suffered in the few years. Okay, it means this 20% profit, instead of providing the good returns to the investors, will be used by the company to comp off the loss they had to suffer in the past. It means that the investor who had invested the money by seeing the 20% profit will will get shocked when he will have to be the part of this 60% loss also, because as I have told you, shareholder or the person or the investor who invested the money in the market or in the company also acquires a percentage in the ownership. Okay, so when the investor will become the owner of the company by some percentage, so he has to borrow the loss also. Okay, but the question is, and the ethical approach is, this information should also be provided to the investor, so that the investor may have make a very good or self-reliant decision. All right, so that's why it is necessary that every necessary information about the financial products and security is available in the accessible, so that the customer must be aware that the company in which he is going to make the investment is making the profit or loss, and what are the promises and what are the consequences, okay, available on the product they are offering to the investor. All right. Mandates timely disclosure of financial statements, risk performance data, and material information. Promotes transparency, helping investors understand and evaluate investment choices. As I have given you the example, he was only showing the profit of 20% but hiding the loss of 60%. Okay, it is a wrong practice, because the customer or the investor who is making the investment has to be liable to bear the loss also about which he is not aware. Okay, so it means that it is a fraud with the investor. Okay, regulatory framework and the compliance establishes and enforces a robust regulatory framework for all market participants, includes rule to protect investors from unfair practices like price manipulation, insider trading, and misrepresentation, monitors and ensures compliance by entities including stock exchanges, brokers, and the companies. Okay, so we can say SEBI monitors and regulates the brokers. All right. Thereafter, the credit rating agencies. Okay. And even the companies which are issuing the shares, and not only monitors but also imposes fines and imposes penalties and fines if the SEBI finds out that these people are involved in some unethical, or these people are involved in the activity considered as a violation of the prescribed law. All right. So this is the regulatory framework. Thereafter, action against fraudulent schemes and the misrepresentation. Actively measures against entities involved in fraud or misrepresentation. Has the power to investigate suspicious activities and impose penalties, bans, or disciplinary action. Act as a deterrent against market malpractices, fostering investors' security. So, as we had discussed in the previous lecture, that whenever SEBI start the investigation, so they act as a civil court. Okay, it means that they could issue the summon, they could ask anyone to make the evidence before the bench. Okay, and even they could integrate and inspect any place and any person. Okay, second thing we can say, they have the power of suo moto. They have the power of suo moto. So what do you mean by the suo moto? Suo moto is basically the ability to launch investigation without filing a complaint. This is the suo moto. Okay, for example, suppose this is the investor. Okay, so if the investor finds out that something wrong done with him, okay, so he has to report the SEBI. Once the report has been filed with the SEBI will launch an investigation into the matter. Right? That is the prescribed norms and protocol. Okay, but due to the suo moto, even the investor is not filed the complaint, the SEBI is able to launch the investigation. Okay, so we can say if we have the company called XYZ, okay, and the XYZ having the 10 investors. All right, so if the SEBI comes to know about that the XYZ had done some unethical thing or done some wrong thing with these 10 investors. Okay, however, these 10 investors are not complaining on the SEBI, but still the SEBI could launch the investigation. So it is the power of suo moto. It means ability to launch investigation without filing a complaint. Doesn't matter whether these 10 investors files a complaint or not, SEBI by itself could launch the investigation if SEBI satisfied that the something is wrong doing in the XYZ. Okay, and where we could challenge the decision of SEBI? We could challenge the decision in SAT. Okay, it is a Securities Appellate Tribunal. All right. So remember these things. Thereafter, we have the grievance redressal mechanism. Provides mechanism for investors to raise complaints about investments of market intermediaries, ensures prompt and effective redressal of grievances, enhancing investors' confidence. All right. So we can say, theoretically, we can say this is the XYZ. They had the intermediary. Then we have the investor. This is the flowchart. Okay, so theoretically we can say if something happened with the investor and investor finds out that he was the part of the fraudulent activity, so he could complain the SEBI. It is a theoretical part. But now assume yourself in place of the investor, and now you are in the real world. You finds out that something wrong happened with you. You know that you can go to the SEBI and complain about it. But the question is how? What is the procedure you have to follow? How to reach the SEBI officials? What will be the path of the investigation? What are the required documents you have to present them? Okay, what is the time will be taken by them? So all the things you have to consider while you are filing a complaint. All right, so that's why SEBI over the period of time develops a grievance redressal mechanism. Okay, so we can say if the investor finds out that something wrong happened with him, so he could reach the SEBI easily. He could tells the problem to SEBI easily. Okay, he could manage and represent the required documents. He would be treated well, and his grievance would be resolved as soon as possible. All right, so that this investor should feel confident that whenever he is dealing in the share market and something bad will happen to him, so he is not required to worry. He could reach the SEBI through these matters. This is the procedure he has to follow, and this will be the result he will get in the end. Okay, so this is the importance of grievance redressal mechanism. Okay, thereafter we have the continuous monitoring and interpretation. Continually monitor market trends, investors' behavior, and global best practices. Adapts and updates the regulatory framework and investors' protection measures, addresses new challenges and risks in the evolving financial market by through regular inspection and by through regular meetings and suggestions. Okay, so we can say SEBI comprehensive measures plays a pivotal role in safeguarding investors' interests, promoting transparency and the ethical practices, and enhancing the health and credibility of the Indian securities market. This contributes to the stability and growth of the India's financial ecosystem, as we have discussed in this lecture. Now, we have the provision of market regulation by the SEBI, like how the SEBI regulates the regulates the share market. Okay, so we can say SEBI's role in the market regulation encompasses establishing and enforcing a regulatory framework. Okay, overseeing and market participants, conducting surveillance, and preventing unfair trade practices. All right, it means that first step is establishing and enforcing a regulatory framework. It means setting the rules and regulations to be followed in order of maintaining the regulations and transparent and fair practices. Okay, second thing is that SEBI has to ensure that the market participant, it means whether they are the investors, they are the companies, they are the intermediaries, all of them are following the rules and regulations properly or not. Okay, for this they have to conduct a surveillance. Okay, they have to check them on the regular basis, and if they finds out that something unfair has been done by them, then it is the responsibility of SEBI to prevent this kind of practices. Okay, how? Let's start. The first is the regulatory framework. Formulates rules and regulations under the SEBI Act 1992. Issues guidelines for listing requirements, disclosure norms, and investors protection. Periodically updates regulation to adapt to market changes. Aims for transparency, fairness, and investors protection through the oversight. So first we can say the SEBI Act of 1992 provides a provisions and the powers to the SEBI for the formulation of rules and regulations of the market. Second thing we can say, whenever a company wants to be a listed company, as I had told you, if there is a private company which wants to be the public company, so they have to launch the IPO, which is the initial public offering, and for this they have to deal with the SEBI. Okay, and they have to follow the prescribed procedure. So in the prescribed procedure, we can say SEBI mandates the listing requirements. Like what are the requirements of the listing company. And what are the requirements the company is required to follow so that they could be listed on the stock market? Second thing is that disclosure norms. They are something which has to be disclosed front of the SEBI, and thereafter the investors protection. Okay, so we can say, suppose if this is a company XYZ Private Limited. Okay, now this company want to be the XYZ Limited. Okay, it means now the company is listed company and they are attracting the people and the investors to invest in their company. All right, for this they have to disclose several norms like their financial statements. Okay, their governance structure. All right, their balance sheet. Okay, and their ownership criteria. Okay, and last part is agreemental deed. Like what will be the share, what will be the promised interest or return, okay, and how much the shares will be kept by the investors, and when the company might be buy back the shares. Okay, so all these kind of norms has to be released in the public while becoming a listing company. All right, thereafter periodically updates regulation to adapt to the market changes. As I have told you, the market is a dynamic. Okay, so there are a need of changes in every after some months. Okay, that's why the SEBI periodically updates the regulations which are to be adopted in view of the present conditions of the market. Okay, aims for transparency, fairness, and investor protection through oversight. All right. Thereafter, we have the oversight of market participants, like how the market participants are being oversight. First is regulate entities like the stock exchanges, brokers, mutual funds, and the credit rating agencies. All right, sets eligibility criteria, codes of conduct, and regulatory standards which are to be followed by the market participants, ensures integrity, ethical standards, and compliance with rules by the market participants. So these are the three major steps which the SEBI ensures to be followed while oversighting of the market participants. Okay. Thereafter, the market surveillance uses advanced systems to monitor trading activities in the real time. Like we had taken the example in the previous lecture, it is a form of digitalization. Okay, so that everything and record of everything, you can say, should be on the internet and could be accessible by the SEBI on demand. Okay, rather than keeping the records in the physical faces, which required a lot of time to access even the one file. All right, because in the physical work there are lots of things which have to follow, but while the things are on the online or through the digitalization, the SEBI could easily access any file of any year for the particular reason. Okay, thereafter tracks market data, trading patterns, and transaction volumes. Okay, like how much shares has been sold off, how much shares have been purchased off, this information, trading patterns, like what was the basis behind this kind of data, means how many shares were purchased, how many shares were sold. Okay, and thereafter the transaction volume, it means what was the total value. So we can say first is total number of shares buying or sold during particular time period. It is the first thing. Okay, second is what was the cause or reason behind such kind of data. Second thing. Third, total value of transaction. Okay, so these are the three things. First, how many shares were bought or sold by the market participants. Second, why the shares has been sold and purchased. And third, what was the total value of transaction occurred. Okay, so SEBI keeps a record of these things to understand the market and do the surveillance. Thereafter, identify suspicious activities including market manipulation and the insider trading. Okay, so when the SEBI analyzes these facts and he got to know about that there will be a huge number of buying and selling of the shares, but the cause or reason behind them was not justificable. So in such a scenario, SEBI might consider it a case of suspicious activity. Okay, suspicious activity. All right. Thereafter, takes action to maintain market integrity and fairness. Suppose after getting the suspicious activity, the SEBI launches an investigation and they finds out that something was wrong with that kind of transaction or with that kind of data. Okay, and SEBI finds out that there is a total violation of the rules and regulation. In such a scenario, they could take the actions so that the example could be set, and it will be the maintaining of market integrity and the fairness. All right. Thereafter, investigations and the inquiry powers. Authorized to conduct the investigations related to the securities market. Okay. Investigates market manipulation, insider trading, and securities law violation. Plays a crucial role in uncovering misconduct and maintaining market integrity. Okay, as I have told you, the SEBI is authorized to conduct the investigation with the power of civil court. All right. Thereafter, imposing the penalties. Can impose penalties and sanctions for securities regulation violations. Penalties includes fines, restrictions, and revocation of license and registration. Okay, serve as a deterrent against regulatory violations. Okay, so we can say the SEBI is not only authorized to investigate and you can say prepares a charge sheet against the violators, but SEBI is also authorized to impose the penalties. It means they could impose the penalties like fines, restrictions, revocation of license, or the registrations. All right, this is basically a deterrent against regulatory violations, so that the one who is trying to become the so over smart and surpassing the regulatory framework should get the message that if he done anything wrong or unethical, the SEBI will finds it out, launch an investigation, you can say prepares the evidence and impose the penalties. All right. Prevention of unfair trade practices. Enforces regulation to prevent unfair practices like market manipulation and the insider trading. Monitors trading activities and patterns closely to find out the cause and the reasons. Takes enforcement actions to ensure market fairness and transparency. If they finds out that there will be some suspicious activity involved, so they could launch the investigation. Okay, and could impose the penalties for the market fairness and the transparency. Enhances investors' confidence and trust in the market. Okay, whenever the investor will know that he will be protected by the SEBI if anything wrongs will happen with him, so he could do the trading more freely rather than be in the fear that if something happened to him, no one is going to save him, right? So that's why SEBI's steps enhances the investors' confidence and trust in the market. Okay, so we can say SEBI's rigorous approach in the market regulation is essential for maintaining the integrity, transparency, and fairness of the securities market, thereby protecting investors' interest and ensuring the stable trading environment. Okay. Thereafter, now we have to talk about the composition of the SEBI. Like, what is the composition of SEBI? Okay. So the Securities Exchange Board of India is composed of various entities and officials, each playing a key role in its functioning and decision making. All right. So let's start. The first we have is the chairman. Okay. So what about the chairman? He is the highest ranking official in the SEBI, appointed by the Government of India. He provides a leadership, sets strategic direction, and ensures effective functioning. He represents SEBI in domestic and international forums. Alright, so these are the facts and figures regarding the chairperson. Okay, thereafter, second formation we have is the whole time members, also known as WTMS. High ranking officials with experience in financial markets and regulations oversee specific departments and functions within the SEBI, implement policies, conduct investigations, and ensure regulatory compliance. Okay. Thereafter, we have the part-time members also appointed by the government, bringing specialized knowledge and expertise. So you can say, suppose if the SEBI is dealing with some kind of special case, okay, about which they do not have a manpower who could indulge himself better than in that case. Okay, so in such a scenario, the Government of India could appoint the member who will be known as the part-time members, who will have the specialized knowledge and the expertise required in that particular matter. Okay, often industry experts, academicians, or professionals who are having the knowledge of that field contribute to decision making with valuable insights and the perspectives. Got it? Thereafter, we have the Reserve Bank of India. It is a nominee. A representative forms India's central bank, ensures coordination and cooperation between the SEBI and the RBI, so crucial for financial stability and the market impact. So you can say both the RBI and the SEBI are the apex institution of different fields. RBI is the apex institution in the monetary field, whereas SEBI is the apex institution in the stock exchange. Okay, but both are having the greater impact on the economy. If anything happens wrong with them, it will impact the economy as well. Okay, so that's why it is to be ensured that both of them must have a good coordination and the communication between them. Okay, for this, SEBI always having a nominee from the Reserve Bank of India, who will not only represent the Reserve Bank of India, but also communicate the decisions between the SEBI and the Reserve Bank of India, and also proposed proposals for the required steps to be taken by both of the agencies. Okay, crucial for financial stability and the market impact, because we can say if these two organizations which having a greater control over some different fields not able to coordinate effectively and efficiently, it means that the economy at some point of time will have to suffer a lot, because we were not able to manage the things on time. Okay, so that's why it is crucial for the financial stability and the market impact. Okay, thereafter we have the central government nominees, official from various government departments, ensure SEBI's policies align with government policies and regulations, maintain a harmonious relationship between SEBI and the government. Okay, so we can say suppose this is the Government of India, GOI. They had formulated the policy called XYZ. Okay, so this is SEBI, which is the you can say apex institution of the stock exchange. So the nominee of central government will work as a bridge between the SEBI and the central government. Okay, he will communicate the decision of government to SEBI and will also communicate the SEBI's response to the Government of India. Okay, so that we can say a better coordination between them could be assured. Okay, now let's move forward. Thereafter, we have the Market Surveillance Department, ensures fair and transparent market functioning, utilizes advanced technology for real-time trading monitoring, detects insider trading, market manipulations, and irregularities, takes actions to maintain market integrity. So we can say MSD, Mahendra Singh Dhoni, okay, not, it's Market Surveillance Department, okay. It's having the 4 steps to be followed to ensure the fair and transparent market functioning, utilizes advanced technology for real-time trading monitoring, detects insider trading, market manipulations, and irregularities, and 4th, takes action to maintain the market integrity. So these are the works defined to the MSD. Okay, not Mahendra Singh Dhoni. Okay. Thereafter, we have the investors, services, and education. Okay, dedicated to protecting and educating the investors, conducts awareness programs and about investment options and risk, acts as a bridge between the SEBI and investors, addressing their concerns. Okay, so basically, these are the people who are responsible for education and awareness program of SEBI. All right. Thereafter, we have the IAD, International Affairs Division. They are required to maintain the communication between the international regulatory bodies. Okay, engages in information sharing and the collaborative initiatives, fosters international relationships for regulatory harmonization. So we can say, actually, post 1991, when we adopted the LPG, okay, liquid petroleum gas, no, liberalization, privatization, globalization. Okay, so we open the Indian stock market for the foreigners as well. Okay, so that's why we are required to maintain a particular coordination and communication with the foreign stock exchange as well. Okay, that's why in the SEBI, which is the apex institution in maintenance of the stock market, having its own international affairs divisions for these following purposes. Okay, thereafter we have the market intermediaries regulation and supervision department. It regulates and supervises market intermediaries, sets standards and conducts inspections, ensures ethical practices and compliance with the SEBI regulation. Because market intermediaries are the one who will bridge the investors with the company. Okay, because they are the one who are communicated directly or indirectly with the investors about the company. Okay, so if they will represent any facts in a mal way, it will directly impact the harmony of the market. All right. Thereafter, they have the corporate finance department. It focuses on regulating the primary market, responsible for IPOs, right issues, and the public offers, ensures compliance with disclosures and transparency requirements, promotes fair and equitable participation in the primary market. We can say, basically, in the stock market, there are two types of market: primary and secondary. Okay, primary is the market where the first time offers are listed. Okay, secondary market is where a regular time offers are listed. Okay, so we can say, when the company enters into the market for the first time, they will have to listed their shares in the primary market. Okay, but when the company registered itself or listed itself in the market and then they launch the shares again, then the shares will be launched in the XYZ. For example, secondary market. For example, we can say we have the company XYZ Private Limited. Okay, so in order to become a limited from the private limited, they will launch the shares. Those shares, because they are launching for the first time, will be launched in the private market. But once the company will become listed or become the limited, so whenever next time they will launch the shares will be launched in the secondary market. Okay, understood? So we can say corporate finance department is basically deals with the primary market. So that's why they are responsible for the IPOs, right issues, and the public offers. Okay, and that's why they are ensuring compliance with the disclosure and the transparency requirements. Okay, so we can say these departments collectively work towards regulating the securities market, protecting investors' interest, promoting market integrity, and providing investors education, ensuring a well-regulated and transparent security market in India. All right. So students, here we have finished what? Stocks and Exchange Board of India, Securities and Exchange Board of India. Sorry. Okay. In the next lecture, we will continue with the another important topic of the banking awareness. Till then, I hope that you will become serious. Okay, you will revise the previous videos which we had discussed already. Okay, so that you will find yourself in a better place while you will have the lectures of the another topic. Okay, so with this note, let's end this lecture and we'll see you in the next lecture. Thank you.